My name is Nathan. I'm the founder of MetaSignals. We help you to trade crypto with a proven edge. Today, let's talk about trading blind. So when I first started MetaSignals, it was actually just supposed to be a system for myself, a little personal project where I wanted to be alerted to high probability setups, where I would then pull up TradingView, look at my go-to indicators, the Joule, BBWP, PMARP, RSI, EMAs, and I would decide, okay, I like this one, or I like this one, but I'm going to look for a deeper entry, or nope, I'm not taking this. That was the original intention. As the project grew and it became a public-facing service, we've realized that there's a lot of people who don't have the time either to learn the TA or to assess the setup when the alerts come in. So for those people, you're going to be looking at trading blind. You know in advance you don't have the time to assess the setup, and you don't have the time to be in front of your computer waiting for the alerts. So you're going to be trading blind. Nothing wrong with that. And also you can actually be extremely profitable, but you have to follow some basic rules. Let's take a look at those rules. So first off, this is the dashboard, pending and resolved alert tracker. We've just gone through probably our worst losing streak since we launched, since over 2 years ago. Basically, an altcoin setup can be perfect, and ETH and Bitcoin are in a death spiral. It doesn't matter how good the altcoin setup was, right? When the market's extremely weak and you're trying to long a perfect altcoin setup, what you're looking at now is the result. Now, this annoys me more than anyone because I know that it can and will be better. But for now, yeah, you're going to have losing streaks. By the way, we've also had winning streaks of nearly 150 alerts in a row. So it goes both ways. But if you're trading blind and you hit a losing streak like this, and let's just say you had gone into every single one of these alerts and you had risked 1% of your account per trade, which in the moment seems very reasonable, right? But you just enter every single one. You're flirting with blowing up your account in a weekend, basically. This was just the last 100 trades. It hasn't been great. No way around that. So we've done the work of analyzing the data and figuring out, look, for people who do want to trade blind and they know that that's what they're here to do, what's the best approach that they can take. I will post a link to the report in the description, and also it's already in the Discord. It's a 13-page report. Let's just scroll to the end to begin with to highlight the key points. So you're going to be interested in the 2-hour, the 3-hour, the 4-hour, and the 6-hour, and nothing else. Within these timeframes, you're always going to be exiting in full at TP2. Your stop loss method will be waiting for candle closures. Based on the alert price and the stop loss value on the alert card, you're going to risk 0.2% of your account per trade, and you're going to stop taking trades when you have 10 concurrent trades open. So you've risked 0.2% of your account per trade. There's 10 open. 6 more alerts come in on the 2-hour to 6-hour timeframes. You can ignore all of them. When we talk about risking 0.2% of your account per trade, we need to understand a little bit of the nuance around this. Let's take a look at a recent Bitcoin 6-hour alert that did not play out to TP2. If you had been risking 0.2% of your account at this level here, in actuality, waiting for this 6-hour candle close, you lost about 0.4% of your account. The data that we're presenting takes that into account and it accepts it, because long-term, you're better off waiting for these closures. Many, many, many times you'll see price come down, wick below the stop loss value on the alert card, and then go up and get the win. When you're waiting for the candle closures, you're exposed to potentially big risk because, well, October 10th, 2025, go look at the chart. Not pretty. So even when you're waiting for the candle closures, we recommend using an emergency static stop loss. When you use that emergency static stop loss as a true emergency, you're going to place it under macro support. So on something like this, if you flip to the daily, you have your most recent low from November 2025 here, and something below this. If a 6-hour had wicked from here, what is that? That was the alert price, and if it had wicked 10% within 6 hours, fair enough. you didn't lose 10%, right? You're losing 0.2% at the stop loss value. This looks like you're losing maybe 0.7, 0.8% of the account if you were to hit the emergency static stop loss in this scenario, right? Some people may wish to use the emergency static stop loss a little bit differently, basically not exposing themselves to this much risk, placing this, you can place it 50% out from the stop loss value on the alert card. You can double the distance. We don't have the data yet on the ideal emergency static stop loss percentage. So that's a variable that's going to be different for different people. I prefer to use it as a true emergency, which means it's going to be under macro support if I'm in a long. So trading this way, our win rate is not going to be spectacular, right? Across all of these time frames, we don't hit 60%. And that's okay, because when we're winning, our RR is sufficient to more than make up for the lower win rate. A lot of people get into trading and for some reason think that they need to have a 90% win rate or something. And if they have a 50% win rate and the 50% loss rate, then of course you're just breaking even. And that's like, no, please look up risk reward ratio. The win rate is meaningless without the knowledge of the RR. It's a minor point, but a critical point, and it seems to be lost on a lot of people. We could give you a 95% win rate, and you could be risking $100 to make $3, and that 95% win rate might appear super appealing and impressive, but is not at all, because when you're wrong, you lose 100. When you're right, you make 3. Your equity curve is going to be a complete disaster. So risk reward ratio, because the risk reward ratio at TP2 is decent, as in much more than 1-to-1, this win rate at 53% for the 2-hour time frame is completely acceptable. You can see that in the data here, 2,200 trades were placed on the 2-hour over the course of nearly 6 years. That resulted in a P&L of $84,000, starting with $10,000, ending at $94,000, with the drawdown being very important, right? The max drawdown, 12%, which is awesome. If you can go from, $10,000 to $94,000 over 6 years, but your max drawdown is 85%, you might look at the equity curve and say, yeah, that's good, I can handle that. But in real life, in real time, as you draw down 20%, 30%, 40%, and you go over 50 and you head towards 80, you're just not going to be able to stick with the strategy. So the drawdown percentage is critical too, and these strategies offer a low drawdown percentage. We can take a look at what this 2-hour equity curve looks like. As the account grows, you're risking the same percentage of your account per trade, 0.2%, with a maximum 2% at risk at any one time. But as the account grows, the actual dollar value risked is, of course, increasing. For our purposes here, we have separated the 4 different time frames. You can be more aggressive with this. We've provided the data for each time frame, right? You can trade all 4 of these time frames blind. You can increase your max risk to 8%. So you have 40 trades open at any one time, maximum 40 trades open at any one time. But when you do that, just expect more significant drawdowns, because you have 40 trades open and you hit a losing streak, you could lose all 40 at once. That's 8% of your account if the stop loss was static, but it's not. You're waiting for the candle closure. So if you have 40 trades open, 8% at a static stop loss, you might lose 15, 16, 20% of your account in a single day if it's an especially bad losing streak. So that one's up to you. We've provided the data by time frame so that you can decide what best suits your trading style, your personality. And yeah, we can just take a quick look at the other equity curves. So we have the 2-hour, the 3-hour, the 4-hour, and the 6-hour. One other point of mention, trading blind, it still takes some effort to get into the trade, right? You receive the alert. If you're just trading manually, right, you've got to pull up your exchange. You've got to type in the values from the alert card. And then you've got to watch the chart if you're waiting for candle closures. We don't recommend that. We recommend using AllTradey. altrady.com. They'll manage your trade based on the candle closure on a time frame of your choosing with a separate emergency static stop loss. You can expedite that entire process by using fast track trading. You need an account with BingX. This is the Discord, so this place trade button. Once you set it up one time, you click the place trade button, amend a couple values in Altrady, and you're into the trade immediately. So that's a way to actually get in the repetitions required over time to benefit from the edge when you're blind trading. We're working on a native MetaSignals app, and the core functionality is that after configuring your settings once, connecting your exchange, the alert is received within the app. You tap a couple times and you're in the trade. So that's going to be extremely useful when it comes to getting in the repetitions needed when you're blind trading in order for the edge to play out over time. Stay tuned on that. It's going to take some time. It's not quick. It's not easy. It shouldn't be. We're dealing with the funds of thousands of different people. It needs to work flawlessly, but we are working on it. It will be launched and we'll post updates in the Discord. I hope this has been helpful. As always, we're in the Discord to answer any questions you might have, and see you next time.